What would you say is the most underestimated, or perhaps I might say underappreciated risk in financial markets today?
I would say that the dollar ceases to be a currency, a reserve currency. That would be a risk, or it would be less of a reserve currency.
So not recognizing the possibility that the US dollar will cease to be the world's reserve currency is the underappreciated risk.
Exactly, because then we'd have a lot tougher time borrowing. See?
We have a long which?
Would have a tougher time borrowing.
Sure. Speaking of the U.S. government or anybody who needs to borrow money in U.S. dollars.
But it may bring financial discipline.
Well, at what cost, of course?
At what cost? But it may bring financial discipline. Now their policies are going to be inflationary. They realize it's inflationary. What do? Either they will try to control interest rates to put it at the level, okay, where to fight inflation, or under pressure from pension funds. You know what? I work all my life not to earn zero interest rates on my money that can vanish. So they start raising interest rate, and we'll witness what we witnessed at some point, third or fourth semester during the Trump administration. When they start raising rates, we'll witness something like that. We'll start having volatility, and the biggest danger is back months bonds. Who's going to buy a bond knowing you have inflation? You see, nobody will buy the back months bonds. So so what happens? They will print money to buy their own bonds. Many countries have tried that, and history gives you 20 or 30 episodes of such failures. One difference is that so far, the reserve currency in many countries is US dollar. This is not a permanent situation. See? So, at some point, the reserve currency was the Tyrian shekel. Okay? And last time I checked, it's no longer a reserve currency anywhere. It was a reserve currency at the time of Christ. You see? Where people paid in Tyrian shekel. Well, it's no longer the case. So you got to realize that this is not a permanent solution. Look what happened to the British pound. It was at some point the currency. And so you have a lot. And so I think that there's so many things that can go bad that you can explain, and probably other things that we haven't seen, that it's not a wise situation. And it's not wise to be in stock without tail hedge. It's not wise to not be in stock. This is what was even more interesting, is that if you're not in stock, things inflate around you. And if you're in stocks, so you have high uncertainty and high tail uncertainty. It's not like if you say high uncertainty and stocks can only go up, that's fine. That's not uncertainty. Uncertainty is when you may have a compensating effect that goes the other way. And I remember, if that was so easy to rewind a thing, I remember when I started trading, where interest rates were, and Paul Volcker spent years to bring down inflation. It's not easy to contain inflation. If we look at history, and all it takes is a couple of Google searches, and you look at history of inflation, very often it's deflation in the beginning. And then you have hyperinflation. It's like it jumps. It's sort of like, it's very nonlinear. And I've seen many people, including Mark from Mark Spitznagle from University, gives the case of the ketchup bottle, where nothing comes out, and then you splash ketchup everywhere. So you have a lot of nonlinearity in finance, and inflation usually is a very weird nonlinear response. But let me now answer you again about tail risk in that situation. Mm-hmm. Typically, if you believe that you don't need tail risk hedges because the Fed is giving you that tail risk hedge, and if you believe that, okay, and people believe that, then the tail risk hedging pricing should be considerably favorable, to the buyer. There is a paradox there that if you think you don't need it, it'd be cheaper, so just get it if you think you don't need it. So I always advise people to buy insurance before the fire and fire insurance before the fire than during the fire. You can hear a lot of people complaining about printing money has, and the general process of printing money. And this, of course, I share their concern, but there's something few are seeing in it, and that's the antifragility aspect. Is that what is a crisis for? a crisis is there, just like a forest fire, to eliminate firms early that shouldn't be, should not be there, to accelerate the evolutionary process. So a firm that should go bust, early, should go bust now when the cost will not be high on their shareholders, on their owners, on the employees, on everyone. And you start it, so it gives you a chance, as they say in California, to start again and start again and start again. So you fail early. So that's the process by which those who need to fail, you do them a favor by allowing them to fail early. What the Fed has been doing is the reverse, is injecting tons of money to keep afloat firms that should not be around, and then delay that failure, because eventually it will happen. You see, eventually they're going to stop doing that, and that's not part of the discussion. This country got strong because we had the highest rate of bankruptcy. You see, because there's a high rate of bankruptcy in America. Tech sector, has the highest rate of bankruptcy you can find. So nobody is bigger than the market.
You told me back in 2017 that President Trump was misunderstood. In fact, you said, and I'm quoting you directly, there's a logic to Trump. Do you still see the same logic to Trump today as you did then?
I would say less so, but no, at the time I was seeing some logic to a deal maker. He's a deal maker. He likes to make deals. And that continued. I mean, he doesn't think in terms of, running, in administration as much as like to do deals. And that continued visibly. He made, being a real estate developer, he made an offer or tried to make an offer to buy Greenland or portions of Greenland. Well, that was part of the deal-making thing. And he engaged in some deal-making in the Middle East nearby, not far from here, between Israel and a few. So that was some deal-making that has been taking place. He, of course, failed in the deal-making with the Iranians because the initial the idea with the Iranians was, hey, cancel the deal, I'm going to bully them into a better deal for America. And visibly, that did not happen. So there's that deal-making aspect of Trump that continued, and you can see the logic there. But also there's some erratic things you see in that I do not understand. So less understandable. So what I mean is I could see a logic in Trump, and then I start seeing contradiction I did not see before, and made me a little queasy about predicting what he would do. I mean, you still see his general behavior, but there's some erratic component there, and there's no administration or party behind to see what's next. By fiddling with this, plus the other thing is Donald Trump, the first American president to do universal basic income, as you saw, and acquire stakes in corporations because the Fed bought paper. Okay, the fact that they did not or overtly buy stocks, is irrelevant. They bought paper from companies. If that's not socialism, acquisition of the tools of production and making sure everybody has an income, a floor income. I mean, these are some of the central aspects of socialism. Regardless of what government we've had in America, socialist on the right, on the left, anything, what policies were enacted by the U.S. government were driven by the environment. Which is something quite unpredictable and quite unpredicted. Private markets have a huge virtue, is to insulate you from the analyst, the Wall Street analyst who fails to understand risk. So let's say that we have two sisters, and one of them is making $4 a share, and none of the plants have insurance. Okay, and her sister had identical business. She makes $3 a share, but she has, everything is insured. She has lines of credit. She has cash in the bank and everything. Wall Street will favor the first sister, the bad risk manager in the short run. Okay, and then of course the bad risk is going to go bust, and that's unavoidable. And of course, a new company will come in. I would always favor that because of lax-skinned game. That analysts don't really are not survivors. They're not part of the Darwinistic process of surviving risk-taking, and then they like cosmetic things and a good story. So you escape that by being insulated from the market where you can do good things. Okay, and you can see survival of family businesses. and businesses that won't go in the market. And now viciously, if you go in the stock S&P 500, the median duration in the S&P 500 today is 11 years and shrinking. Okay, so it makes sense to be in private equity. Now, the bad news is that many people go into private equity, but not for that reason. You see, they go into private equity because they can lock up investors for a while, they can engage in all sorts of leverage, and all kind of things. So here we have to be a little careful when we talk about private equity.
I see. So let's just, if you don't mind, cover that one more time. The misconception, the main misconception about most people who put money into private equity or private credit or whatever is what exactly?
The misconception is that the private equity is a great vehicle for long-term returns. Okay, insulated from the vagaries of the stock market. Okay, so that's commendable. But the thing is, sometimes people do that to hide, because you can make a mistake for 5 years. You lock up investors for a while. You lock up lines of credit to either engage in monstrous, debt, which is harmful in the long run, or in being insulated from the accountability to investors for a while. So that's a bad part of private equity. But I'm not an expert in private equity.
I get it.
I'm a tail risk person, but some strategies you can only do in private equity.
Right.
It doesn't mean that all private equity is good. What happens is that when people say I'm against globalization, they probably don't know what they're talking about. I mean, globalization pulled 1 billion to 2 billion people out of poverty. You see, and the second thing that against globalization, what does it mean? You mean you want to live in autarky or somewhere on a farm, or like trade with your with the town nearby or something? So I view things as degrees. There's degrees of globalization, and someone identified in the category of very pro-globalization would be a little more to the right, and some people more to the left of that some benchmark in there. So what I think will happen is a smart reorganization of globalization. We need specialization, very badly need specialization, but there are things that, for example, you may need to have locally, just simply out of safety. And the supply chain is very fragile, so it matters a lot if you're dealing with medication, if you're dealing with things that are necessary for your local industry, because a little glitch somewhere stops the whole process. It's fragile. But it doesn't matter much if you're dealing with toys or things that are less essential. So I think that we're going to have a reorganization of what we call globalization to preserve the system. The whole idea is, how can we preserve the system by making it more robust, by identifying the source of the fragility. I like this 80-20 rule that 20% of the things contribute to 80% of fragility, and within that, it's 1% contributes to 50% of fragilities come from 1% of things. So that 1% of thing is nothing. It's small, and that's what we should focus on, and it's not a big deal. One thing that was completely, absolutely absurd is to have one single country, and within that country, in one single area, produce, and I won't name the country, nor to let you guess, produce such a high ratio of essential antibiotics. Okay, and so that's already concentration. And it's not a big deal. You have 3-4 countries and produce some locally. If once you make a list of essential medication, and the second one is the supply chain got both too fragile, because you have companies located in different places, each one specializing in a subcomponent, and there is a fragility. If one of them collapses, everybody collapses. So based on that, it's like you identify them, but that's not the job of the government to do that. Companies who were relying on a fragile supply chain, okay, got harmed, and the problem with those who did not will thrive, and so we have a Darwinistic process by which companies that are wiser will survive and do better in the long run.